Arguably, there's no better sector than the metals to make a lot of money really quick. Realistically, in most intermediate rallies last 3 to 4 months at most, but in that 3 to 4 months, you can make as much money in metals as you could make in 3 to 4 years in the stock market. However, there's a cost. Metals bottom differently than stocks. Um, Anybody that trades metals, you have to understand that this is one of the most heavily manipulated markets on the planet. Uh, the only market that's probably worse is the currencies. So bottoms in metals tend to be very choppy and extended. And the reason being is that the bullion banks are trying to suppress gold and prevent it from rallying, and they want to cover the shorts into a panic, and this is actually a good thing. So at this point, I think most people have learned this lesson that this is just kind of how metals bottom. They have a lot of ups and downs. There are a lot of attacks to try and drive gold back down, and most people have adapted their trading strategies to take this into account. But there are always some, that just can't acknowledge this, can't learn. There's always going to be that 10% that's on the low end of the bell curve that are constantly going to lose money. And like I said, it used to be that most of the people would fall into this trap. And this is kind of, I guess, lucky for us now as well, because the bullion banks also are not learning their lesson. So what has happened in the past is when we start to try and hammer out a bottom, the bullion banks will attack the metals. You get a lot of traders that will jump in a little bit too early. The bullion banks will attack the metals, break a support zone, and then everybody will sell into that support break. And that gives the bullion banks their opportunity to exit their shorts and get long. Well, most people by now have figured out that they've kind of caught on to what's going on. And so most people now don't panic during this bottoming process. They just understand that that you just have to work with the flawed system that we've got. I've mentioned this many times in the past, that the rules aren't going to be enforced for the banks. So you just have to accept that this kind of stuff happens and adapt your trading strategies to take it into account. And I think most people have done that. So once we get close to the bottom or get the bottom, most traders buy and then they just hold on. And so the good thing is the banks also have not learned their lesson. So they keep trying to manufacture this panic sell-off when at this point they really can't. Traders have caught on to the scam, and they just don't sell. And so when you get maybe a break of support like we did right here, a little marginal break, it doesn't cause the panic that it used to several years ago. And what happens is the bullion banks just keep piling on bigger and bigger short positions until at some point then the rally takes off and they get caught in a short squeeze and they lose billions of dollars. And that's exactly what happened right here. I think it's probably going to happen here as well. There was maybe I'm gonna make an example of these people, because it just happens at every bottom. There was probably 15 or 20 people that they give up, they sell, they cancel their subscription right here in this bottoming phase, and nothing wrong has happened. Gold hasn't made a lower low. The miners haven't made a lower low. Gold has closed above the 50-day moving average and above this trend line. So nothing wrong is happening here, but it's just taking longer than these people want. Almost certainly what's happened is when I get bearish, when we're in the timing band for an intermediate bottom, when I see some signs that we are bottoming, and I get bullish, then these people who either don't recognize how these bottoms form or are just too stupid to adapt to it, more than likely what they've done is they've bought huge call option positions with not enough time value, and then every one of these attacks that the bullion banks unleash to try and turn this back down, their call option positions take a big hit. I've been telling my subscribers for a long time now, if you're going to take leverage, use leaps. That gives you an entire year, more than enough time for this bottoming process to run its course, and more than likely the banks will trap themselves into another short squeeze. As I said, they also are not learning their lesson, and so they have not had to become good traders because they had the ability to control the market. And so they just expect to be able to control the market, and so they continue to build bigger and bigger short positions, and they're doing it right as the metals are bottoming, and the market is no longer, at least most of the market, is no longer cooperating with them. They are not able to manufacture the panic that they did in years past, and so they end up getting caught when they can't take the market down, and the rally starts. They end up getting caught in a short squeeze, and then that's what produces this big, strong trending move. And I think we're setting up for another one here. 14. Let me zoom in a little bit here. 1486-ish has been a big line in the sand that the bullion banks have been defending. They don't want gold closing above that level. The risk of a short squeeze igniting gets large if gold can close through this resistance support zone. And let me put in a box here. All right. So you can see on the way down, this was a support. Just bulls defended that, bounced off that a bunch of times, and then finally when it broke through, then this became resistance, and the bullion banks have been using this resistance to try and turn the metals back down, and it's not working. Again, like I said, most people at this point have kind of learned that to expect this. There are still some stupid people that have not recognized this, and if you're one of these people that you just can't learn the lesson, just switch to a different market. The metals are not going to be for you. You have to adapt your strategies to take into effect the heavy manipulation that occurs in the metals market. And if you can't do that, and your emotions just won't allow you to do that, you just can't see or understand or adapt to how these bottoms occur in the metals, then just stick with the stock market. Here's the S&P. The stock markets bottom completely differently. The plunge protection team will usually defend against these intermediate corrections. They will stop them. Often they'll stop them a bit prematurely, and then they will manufacture these violent V-shaped rallies. So if your emotions aren't, if you just don't have the intelligence to understand how metals bottom and adapt your strategy to it and take into account the manipulation in the metals market, then just don't trade that market. Just trade the stock market. The bottoms are very easy in the stock market. You have protection, and you're going to have help. The downside, of course, is that it's going to take you much, much longer to make money in the stock market than it does the metals market, because it doesn't move anywhere near as fast. As I mentioned at the beginning of the video, you can make as much money in 3 to 4 months in metals as it will take you 3 to 4 years to make in the stock market. All right, so moving back to the metals, we are getting another attempt to break at least into this resistance zone today. We'll have to see where it closes. Once we break through it, which is going to be somewhere around 1490, then at that point I think the bank's position becomes hopeless, and they will have made the same mistake that they made back in May, and they're going to they're going to get caught in a short squeeze just like they did back here and lose a lot of money because they have been depending on their ability to manipulate the market as a way to successfully trade metals instead of actually having to develop good trading strategies